Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. Today we're going to talk about emerging markets, and we're going to discuss a couple different ETFs that cover emerging markets, and we're going to talk about why I think you should have them added to your portfolio if you want a complete portfolio. Full disclosure, I am in international markets, but most of my holdings are in developed countries versus emerging markets. First of all, we're going to talk about the differences. We're going to look at some different options. We're going to compare how they have compared and fared over the last 10 years. And we're going to discuss why I think they're important to have. So right now we're on optimizedportfolio.com, and we're going to talk about emerging markets. So if that's something that interests you, do me a favor, drop a like, hang around, let's talk about it. Okay, as you guys know, I feel having international stocks in your portfolio is a good way to diversify. Now, not everybody agrees with me, and that's okay. Unfortunately, in my case, most of the international stocks that I have are in index funds, but they're in developed market index funds. Developed markets being your big countries, Japan, Europe, the countries that have been around doing for a long time. So let's talk about why emerging markets are a good thing to add to your portfolio. Emerging markets are growing countries that are becoming more active in the global economy. As such, they have a lower income per capita than developed markets. The growth of these economies typically coincides with industrialization and increased standard of living. Total global stock market and about 25% of the international stock market. They have outpaced the larger international stock market historically. Arguably more importantly, emerging markets have a lower correlation to U.S. stock market than standard developed international developed markets. They offer superior diversification benefit. Obviously, risks include political instability, currency devaluation, issues in their infrastructure, lack of liquidity, market inefficiencies, and the absence of free market forces. These risks diminish or disappear as emerging markets economies grow. Countries can be upgraded or downgraded from an emerging market to a developed market at any time. So, what's the main difference, you guys? So if we compare emerging markets to developed markets, think of emerging markets as having more room to grow versus developed markets. Similar to small cap stocks relative to large cap stocks in the United States. Emerging markets have historically outperformed developed markets, albeit with much greater volatility and risk. So the first thing I want to talk about, you guys, is these are more volatile. This is the Bitcoin of investing in the stock market, you guys. Big fluctuations up and down happen pretty regularly with this. Thankfully, returns from emerging market stocks have compensated investors for this increased level of risk, with emerging markets still delivering higher risk-adjusted returns than U.S. ex-developed markets historically. So it generally does better than some of the developed markets have traditionally. All right, so let's talk about a couple of the different ones out there. And this gives a list of the 5 best emerging markets ETFs. But we're going to first look at the prices, and then we're going to talk about some different things. So the first one we're going to talk about is VWO, the Vanguard FTSE Emerging Markets ETF, ticker symbol VWO. This has over $87 billion in assets, you guys. A nice low expense ratio of 0.10%. So 10 basis points, $10 on 10,000 per year. And it has about 5,200 holdings. Okay, so look at that one first. The next one we're going to look about is IEMG. That's the iShares Core MSCI Emerging Markets ETF. Again, this has about $54 billion in assets under management, so a pretty big fund. An expense ratio of 0.13%, so pretty inexpensive. Doesn't say how many holdings this one does have. Next one is the iShares MSCI Emerging Markets ETF, ticker symbol EEM. Now this one is the bigger, more liquid brother to IEMG. However, Short-term traders will likely prefer to use EEM over IEMG, but here's why this one doesn't work for me. 0.68% for the ER, you guys. Over 0.5% for an ETF. I'm not doing it. Next one we're going to talk about is SCHE, the Schwab Emerging Markets ETF. Now this is another one with an expense ratio of 0.11%, so 11 basis points. Has about 7 billion in assets, so not quite as big as the other one, but it too tracks the FTSE Emerging Markets ETF. So similar to the one VWO. And the last one I want to talk about is SPEM. That's the Spider Portfolio Emerging Markets ETF. The Spider Portfolio has an expense ratio of 11 basis points as well. It tracks the S&P Emerging BMI Index. So this is a different index completely. So I thought it would be interesting to take a look and see if we back tested these. Okay, you guys, now we're over into Portfolio Visualizer, and we're going to back test two of these ETFs. I've chosen VWO from Vanguard and SCHE from Schwab. We're going to go back 10 years with this, so we're going to start from 2011 till present. We're going to put an initial amount of $10,000. Now, it says rebalance annually, but there's nothing to rebalance. All right, so if we analyze the portfolio, let's take a look at the results. Okay, so we started with $10,000, and we see that there is quite a bit of volatility here, you guys. Now, the last year, they have been going up, and currently they're both sitting within $20 of each other. So portfolio one being VWO is sitting at about $14,590, and SCHE is just behind it with $14,572. You guys, these are really, really close in how they performed. And so to me, I think either one of these funds could be a great addition to your international portfolio. Know that going in, you're going to have increased volatility, obviously, because of the nature of this investment. But I think these are a good way. They're both low cost and a good example of what we want when we're looking for a long-term ETF to buy and hold. What do you guys think? Do you invest in emerging markets? Do you have any international in your portfolio? Let me know in the comments. All right, you guys, I appreciate you coming out. If you got something out of this, do me a favor, drop me a like. It really helps the algorithm for YouTube, gets my video out to more people. If you're not already subscribed, you know the deal. Hit the red button, ring the bell. We'll see ya. Thanks.